Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, having posted a monthly high around 69.14 on Tuesday, the market bulls missed the opportunity to the challenge to the 69.35.75 and instead took a brutal sell-off as its rival, the US dollar, which measures the greenback strength against a basket of six major currencies, surged after a hotter than expected update to the US Consumer Price Index, or the CPI, which has now heightened expectations for a 75 or even talk of a 100 base point rate hike to cool inflation. According to the US Labor Department, the US annual consumer inflation was recorded at 8.3% in August, higher than an estimate of 8.1 annual increase. Looking ahead though, we've still got the Thursday's Australian job report, and then on Friday we've got the speech from Reserve Bank of Australia Governor Lowy. With still much volatile times ahead of us, the market is now looking back towards that base of 66.8085. I do anticipate a bullish response from there because the RSI hasn't fully broken down along with the MACD, so we could see a rebound again from there and give us opportunity to see a further rally, that is to 67.65 and 68.0515. A break there would give further indication to the upside. But at present, the bears are still weighing on the support since the overnight sell-off. The dollar index, which measures the greenback strength against a basket of six major currencies, surged from 107.60 on Tuesday to 109.80 at present. In light of that, the euro took a challenge to the top side briefly at that downtrend and was rejected from 101.60.80 and now a little bit mixed as it sits around the 99.80 level. With the base still holding at 98.80.85, I feel the market can still take the challenge to the upside and eventually break through that trend line. However, we do need to keep a sort of a close watch on the US dollar and see if it can withhold the overnight gains. Looking at dollar yen, the market is still trying to break higher, but still at this point, traders still need to be alert to any warning signs of a Bank of Japan FX intervention, as back in 1998, when we were at these levels around 145, 146, the Bank of Japan did intervene and did see a significant sell-off. And if so, we could see that again if they do intervene around these highs and look back towards the bottom side around 143 to about 142. Sterling also took a heavy sell-off overnight and the market has posted an engulfing candle. And from there, we're looking towards the support level around 114.5. But in light of the technical appearance, if we see a close above 115.85, that would reinstate the bull case and back towards that 117, 118 call. Finishing up with gold, well, the market's retreat is now looking back towards that key level of 1,680.85. Do be aware that last time we challenged there was a good bullish response. But I suppose it really boils down to what the US dollar does. And in light of the pattern, the market the most probably can see a slightly bullish case to about 110 on the index. That would put the gold back towards that bottom side and reassess. Finishing up with oil, the market is still a little bit mixed and still holding around the 86.5 mark. In light of the pattern, we didn't take out the downside, which was around 85.60, and therefore does put further emphasis on the upside. If we do see further rally, that is, then I'm looking up towards 88 to 91 as a potential target. But the technicals are a little bit weak, so do keep an eye on that 85.60 level, as a break would reopen the downside to $81 a barrel. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the ECNTRADE report, and I hope you enjoy the rest of the day.